So first, I want to set the stage. The IRA was passed 2 years ago, a little bit more, and it was just promising hundreds of billions of dollars for solar. And so what I'm happy to be able to say today is that the dollars have started to flow. And so that's what we're going to dive into today with Corey and Sean. So Corey, let's start with REAP grants.
Yep.
So stands for Rural Energy for America program. So we work in Resi, but a lot of the Resi solars that we work with, they're also installing small commercial. And so they've started leaning into REAP grants over the past year. One installer told us that they were able to use a REAP grant with the ITC and depreciation, and the owner of the project was able to cover 90% of the project costs. So can you just quickly explain what the program is and maybe use an example project for the audience?
Yeah, happy to, and thanks for the invite to be here. First of all, the program is the Rural Energy for America program. It is trying to get dollars into rural communities. That's farms, that's small businesses that are in rural areas, and the Inflation Reduction Act added about $2 billion to that program. They also increased the award amount from 25% to 50%. So this is significant dollars to reduce the cost of the system. We like to tell stories at Solar United Neighbors. Ultimately, the consumer or customer energy resource deployment is about people investing their money all over the country. And one of those stories is from McGaheysville, Virginia. We do a lot of REAP storytelling as part of our work. Steve and Stephanie own a vineyard there called Bricks and Columns, and they used to do farming. They moved to hosting wedding events, things like that, and then ultimately ended up becoming a vineyard to keep the lights on. And they accessed REAP to essentially lower their electricity bills from about $5,000 to $7,000 a year to about $1,000. And they did that with some help from their installer to be able to navigate that process. And ultimately, they are more profitable. They're able to use more of their resources for their core business and not for electricity costs. And something that they've gotten out of that really is an appreciation. I just want to read a quote here because this is from them, from the story. And it's, farming isn't always profitable. So what can we do to preserve farmland? This is a big concern. And having that REAP grant available for farmers to help them out is just a really great opportunity for communities like ours. So that's them speaking specifically to being able to save that money and push it back into their business itself.
So they're working with an installer out there. What do you think for either them or for other folks that are trying to access the REAP grants, what's the biggest hurdle?
Yeah, unfortunately, it's actually the application process itself. It is a government grant, and we strongly recommend folks get assistance, either through their installer. A lot of installers will bring that help with them to the table, not all of them. The USDA has also done a really good job of standing up technical assistant providers. They're available in every state. The USDA REAP administrators, the program administrators for the USDA know their programs really well. They've got dollars to spend. So we recommend that customers talk to their administrator, that they really ask questions of their installer about how they're going to support them through the process, because it is a little bit complicated and you do need some help usually to navigate it.
And does Solar United Neighbors do that as well?
We help on the front end to connect people to technical assistance providers. Mm-hmm. We'll do a lot of the help on getting proposals. We have a help desk, REAP help desk service where we're just kind of making sure people understand the lay of the land, how to get proposals and ask questions, and then kind of put them in touch with folks who can help them with the process.
Okay, that sounds good. Okay, let's start to turn our attention now to the Solar for All program. $7 billion was recently awarded to states and some nonprofits to run these programs. All of these are focused on expanding solar access to the lower income and disadvantaged communities. So, Sean, you guys were one of the designers of the program originally. So can you tell us where the program stands and where it's likely to get launched first?
Yeah, absolutely. I wish that I got to tell so many stories about the impact of the program. The money is not yet flowing, so this one is more about reading the tea leaves. But the program is, the sort of applicants have been selected, and the amounts of money that each of the applicants is getting has been selected. We expect this fall we'll start to see the actual program design and the impacts of the money flowing out the door being felt across the country. And then next year will probably be when we see a lot of the dollars getting fully unlocked. And what I would expect for you all is that the states that are going to move the first are the ones that already have pretty substantial rooftop markets or community solar markets, and especially those that have existing low-income programming. You're going to see green banks, you're going to see incentive programs those types of facilities that already exist dumped into. So Massachusetts, New York, Illinois, California, a lot of the states that are leading the way on this, what I would expect is those markets are just going to expand a ton. There's going to be access to cheaper financing. There's going to be access to more and larger incentives. And it's really going to be focused on serving low-income communities in generally the way that that state defines it. So in those places, I think familiarizing yourself with those programs if you haven't engaged with them yet. And while they may have been sort of a niche market in the past, the scale of money involved, I think, really gives this the opportunity to turn that from a niche market into a much more substantial market. I'm also, I'll say, hopeful that some of those states are going to help with some of the challenges they know that the community has faced. So I know one thing we're working with some administrators on is like income verification and what are more seamless ways to do that so that you as developers don't have to be asking your customers to run credit checks or verify their income with you, which is not necessarily a normal part of your customer interaction.
Yeah, so one of the things, Sean, you mentioned to me in the previous conversation, you said, Illinois, they actually have a really good Shines program. What aspect of the Shines program do you think will get them off the ground first? Why is Illinois going to be one of the first to launch?
Well, I think they already have programs that are serving folks that they know basically work. They have developers that they're partnering with. And so it's easy for them to just put the money into those programs. They don't need to design something new for Solar for All. So I'm expecting places like Illinois will do some innovation around this. I know they're doing a lot to bulk up their green bank facilities and their financing facilities. But a lot of what they're going to do is just expanding the opportunities that already exist, which is going to be very different from places you might imagine like Arkansas or Georgia, where there's a lot less opportunity already for rooftop solar. And there's essentially no low-income oriented programming or policy there. And in those places, there's actually nonprofit coalitions that have been granted the money. And so they're going to be getting the money out the door much more creatively and probably somewhat ad hoc. And that's going to take a little bit of time. They can't do that overnight. Some of these nonprofits are pretty small, so they're going to scale up quite massively.
And so, Corey, Solar United Neighbors, you guys are part of the Solar for All program as well. What more can you add to that?
We are. We're direct subrecipients in a couple of places, as well as advising on sort of program rollout for others. And I agree with what Sean said, that there's a lot of variation that's going to come from these models, both on the financing side, but also on deployment for how procurement is done. One model in particular I think is interesting for folks to just be aware of is using another part of the Inflation Reduction Act, which is direct pay or elective pay, to facilitate systems being deployed for income qualified homeowners who maybe are not going to be as able to take on even a good quality loan, and use that to actually claim the tax credit. So there are some models that are starting to be developed where the nonprofit holds the lease for 5 or 6 years until the clawback period is over, uses that tax credit, and then transfers ownership over some period of time to participants. So that's a new model that's being worked out in a bunch of different places. We've experimented with it. Some other folks like Capital Good Fund in Georgia are also trying to get that off the ground.
So let's dive in deeper on there, because there's direct pay. So there's the standard direct pay that some of y'all may know. Can you just describe direct pay for those that don't?
Yeah, so elective pay is really the means in the Inflation Reduction Act to allow nonprofits, municipalities, tribal organizations to claim the tax credit through a filing process with the IRS to declare that they are going to build a project, that they've actually completed that project, and then for them to file on their taxes with that registration to get that money back on their taxes. Nonprofits don't typically file taxes, so there's some complexities there for a nonprofit. As providers for those services, it's really important for you all to understand how that works so that you can also lend assistance to, say, a nonprofit that's deploying solar but trying to own and operate it versus using a leasing model, for example.
Wait, so, and then what you described in that step, the nonprofit doesn't actually get the funds back until after the install.
Yep.
So for installers that are trying to do direct pay, what's the biggest hurdle there for for implementing direct pay?
It's helping. I mean, in my opinion, it's helping bridge that 30%. So if you've got a church, for example, that wants to own and operate it, they're going to need to be able to pay that up front, even if they're getting 30% back. So having that bridge financing available is useful. I expect that some of those green bank opportunities from the Greenhouse Gas Reduction Fund money that's also flowing will provide some of those, but they're going to look different in different parts of the country. So having that ability to support a nonprofit and provide that financing to get them until they get their direct pay is important. And that's going to take a lot of different forms.
Okay. And so from there, that's being combined with the Solar for All program potentially with more creative programs?
Yep.
Yeah, absolutely. And I think in particular in the states where they're going to have to be more creative because they don't have existing markets and policies. And so you're going to see folks like the Capital Good Fund in Georgia. I think it's an incredible opportunity for developers reaching out to these administrators, the applicants that won, particularly the nonprofits, but really, the West Virginia Department of Energy. These folks are overwhelmed, I would imagine, with the amount of money. And from what I've heard from the applicants I've spoken to, the idea of getting it out the door. And they're going to love to talk to developer partners who have an idea for how they can build in that area. We know it's complex if there isn't net metering, for instance, in a given marketplace to figure out how to deliver benefits. But I also know that this is some of the innovation we've seen in the rooftop space is figuring out different ways to organize to deliver benefits to the customer and the grid and to get paid for that. So I think you can think creatively with these folks, and there's a lot of money really in any different way you could want it available in a lot of these places if you can offer something at scale and if you can really show that the benefits are flowing directly to customers.
Mm-hmm. Both of you, from a question of both y'all actually, and so there has been work with solar for LMI communities in the past. What are some aspects of the learnings that we've had from that the installers and developers that are going to do this Solar for All program, what do they need to know to make sure it's successful, or some pitfalls I need to avoid?
We've only got 30 minutes here. There's a lot of practical knowledge I think that the solar industry has to communicate to awardees about running programs like this. And it's as simple as what is a set of milestone payments that is actually manageable for you. We see sometimes payments get made at the end of a project, and even an individual rooftop project. This is a problem for cash flow for a lot of folks. We need to communicate that to system design folks so that they understand that this is something that is necessary to make the program function for the installer community.
I think there's going to be pretty high standards for what is being returned to the communities or the individuals who are being served. And so if you can figure out in your financial model how to provide direct savings on bill, that's obviously a pretty easy way to deliver benefits and to prove that you are. But there are other creative ways to work with energy efficiency installers to do more of a whole home upgrade and sort of have some of the solar benefits subsidize some of the other home transformations, which also could benefit from some of the other IRA programs. If you can think creatively about different ways to deliver that benefit, I think one thing that will be a challenge is it's going to have to be real and it's going to have to be pretty big. This isn't going to be a race to how sort of low savings can you deliver and still build a market, because the federal, sort of standards and the EPA oversight is going to drive the real question of significant portion of those savings or the economic value of the project going to the customers. So you're going to have to challenge yourself to really make sure that you can demonstrate that and that it's real, as opposed to some of the state programs we've seen where they've offered scale, in return for perhaps a smaller amount of savings going to customers.
Yeah.
Okay, so let me try to summarize this real quick. So right now, the money's been awarded to these organizations. They've got to design the programs, which can be influenced by the community, and essentially RFPs or something similar will probably be happening later this year, beginning of next year.
Probably beginning of next year, most likely. Yeah,
okay.
and into that. Can we make one last point about
Sure.
compliance? So this is Sean mentioned this earlier in terms of like EPA guidelines. Davis-Bacon is applicable here for all of these projects. So if you are comfortable with that regime already and you understand what's involved, that's a competitive advantage for you in participating. Build America, Buy America is also applicable for some, not for the rooftop and for private multifamily, but for public multifamily and community solar. You're also going to need to be able to walk those lines as well. So that's information for you to go into those engagements with understanding.
Okay. All right. We've got one more program I want to talk about, and I think this isn't actually well known by the organizations out here. It's the National Clean Investment Fund. So Corey, can you just tell us a little bit more what it is, why resi installers should know about it?
Greenhouse gas reduction fund money that went out. There were 3 buckets. One is Solar for All, which we've been talking about. One is the Clean Communities Investment Accelerator, which goes to CDFIs and credit unions, specifically focused on income qualified and like disadvantaged communities. The last bucket, which is the largest, $14 billion, if I remember right, it went to 3 national organizations or groups of organizations to essentially supercharge financing throughout the country, not just for solar, but for all electrification and all related products. So that money is going to be flowing down and over to all sorts of financing institutions to really, hopefully, provide what I hope is really competitive loan products and other financing for you all to use, as well as municipalities and nonprofits and others who are trying to engage with these programs.
And will these be the standard finance providers, players right now, or are they going to be new ones?
I think it's going to be all of the above. It's a lot of money to go out, and I think all of that design is happening now, but it is definitely in the thousand flowers blooming category from what I've seen.
And then Sean, I think 40% of those funds are going to go to the LMI communities. Is that right? How's that going to go? How's that going to work?
I think I think it'll be more than 40% realistically, because I think the mission of the folks who are trying to get this money out the door is going to drive it in that direction. And it's going to dovetail with programs like Solar for All, like REAP, like some of the energy efficiency programs that are out there to align with those. So you're going to see if you qualify for one program, if your project's in one, that you get sort of approached by the suite of folks who can offer the financing support and otherwise. And so I think if you find the type of project, there's one thing I would recommend is figure out the type of project you want to build. What's your ideal low-income serving solar project, whether it's a sort of church building and you're trying to create a more community-oriented benefit, or it's just a straight-up rooftop and you're trying to figure out how to serve low-income folks competitively. If you figure out the type of project you want, I think that you can approach these administrators and they will hit it from all of these different programs to get you the money that you need to build that. So that's where I would start.
We've talked a lot about the LMI communities. You've talked, Sean, you call it a more sensitive customer segment. Why is that?
Well, the reality is the risks are extremely high for them. We all know it's a risky marketplace for financiers as well, and so there's challenges around financing, which I think this money is going to more than solve in a lot of ways. But people need to realize that for a lot of low-income families, the difference of $20 one way or another on their electric bill can be transformative, both as an economic opportunity but also as a crisis. So you look at just one example, but things like the seasonality of solar power and the fact that based on some models for both rooftop and community solar, folks might be banking a lot of credits in the summer and they're paying a lot in the summer, but they know they'll save in the winter, and over the year you save a ton of money. That's how it works with my community solar project that I'm part of. That doesn't work for a low-income family. They can't pay more than they would have otherwise in the summer because they'll save in the winter. They don't have necessarily, I'm using generalizations, of course it's different for every family, but they don't necessarily have the buffer to withstand that. And so you have to think about insulating these folks from any financial risk. If you're doing a loan and you want to help someone purchase a system, not every low-income family is going to be set up necessarily to just take on $20,000 of loan, no matter how good the financing terms are. That can be a huge weight on a family and impact their credit score. It can impact a lot of things. And so there are dynamics like that that you need to be aware of around what is the personal risk for those families economically. And I think that's a really critical piece. And then the stories of failure are disastrous. So all it takes is hurting some of these families and they can't get food on the table, or they can't pay for their kids' daycare, or they get their car repossessed. Those stories are tragic and they're media ready. And so we're going to see increased attacks and misinformation about the solar industry, really honing in on any of those stories that we create through not being sensitive enough with our treatment in those communities.
You have anything to add, Corey?
Not on that topic.
Okay.
Yeah, I think those are wise words.
All right. So right now, the direct pay money is going out. If you're an installer out there, I'm going to ask two questions for the remaining time. So first question is, what's your number one tip for the audience today?
I would say with respect to the REAP program in particular, if you are thinking about making that part of your business, really take the time to learn the program, talk to your local administrator, put supports in place with your business so that you can give people a good customer experience. You definitely want to be able to make sure that your customers understand what's involved, and really to also be open to supporting some of the risks that they have, because they cannot get paid for anything until their application gets accepted. Not approved, but accepted. So they're going to have some issues where they need to make sure that they can't go out of pocket, for example, until they actually get approval. So just creating that good customer experience for them is going to go a long way, and that technical assistance on the application process.
Sean, what about you?
I would say reach out to your local applicant winner. So look on the EPA's website for Solar for All. If you just Google EPA Solar for All, the first listing is going to be the full list of applicant winners. And reach out to the folks in the states that you work in and talk about what you do, what your niche in the market is, and how it could serve low-income families and communities. Because I think even the states, that have solid low-income programming like Massachusetts or Illinois or California, they're all going to think creatively about how to get this money out the door, and they're going to be looking for partners who can help them achieve scale fast. They have about 1 year to design the program starting this fall through next year, and then they have 4 more years to get all of the money out the door. So they really need to move pretty fast, and they want to have a huge impact. And I think there's a lot of room for, even 1 or 2 companies in a state to take a big part of that marketplace if they have an idea that works.
All right. Now here's the one last question. So we've been giving tips. How can the community help y'all? What asks do you have those in the audience? Corey?
I would say if you are experiencing, our Solar United Neighbors, we're advocates ultimately. We're trying to improve the conditions for solar adoption across the country. If you're experiencing things that you think are causing friction to deploying clean energy in your area, let's talk. We want to make sure that we're able to identify those areas and really provide support so that markets work as well as they can, whether it's the REAP program or Solar for All or just general solar market conditions.
Sean?
Yeah, I think that's a great point, and would say not only tell us as policy advocates what's standing in your way, but tell the local winner, tell the applicant who's handing this money out, because they're all quite influential. Even the nonprofit winners are now sitting on $100 million, so they're pretty influential. And then tell your local legislators and decision makers, because they need to know the opportunity they're missing and the fact that this money is going to go away if it's not getting out the door. And then to just dovetail that with tell the positive stories. We really need to get out there and talk about how solar can be transformative for individuals and communities. These programs are going to create a lot of really transformative change. And we need to be telling that story to reporters, decision makers, you name it. We can help you with that. So tell us when you think you have a good story, or just go directly to the media and decision makers and tell them about what you're doing.